The most awaited event of 2025, Budget 2025, is on February 1st. Finance Minister Nirmala Sitharaman will present the budget in the Parliament. From capex to spending to income tax, investors are anxiously waiting for some kind of good news. Market has been very cautious. Hello and welcome. My name is Shruti Sarkar and you're watching Good Returns. फ्यूचर फोकस बजट 2025 के इस एपिसोड में हम जुड़े हैं राहुल घोष, CEO Hedge.in से. हेलो राहुल.
Hi, thank you for having me.
Rahul, I'll go straight to the point. What is your overall expectations from the budget?
So at the outset, let me tell you that every year we have so much of expectations from the budget. But unfortunately, it is more or less status quo that happens every year, barring few sectors. And I don't expect this year to be any different. The same pushes in terms of infrastructure, same push with respect to renewable energy, which was the flavor of last year as well, will continue this year. I also expect some kind of benefit to also come to electric vehicles, although renewable energy is little broad. Electric vehicles, I expect some kind of benefits to come to. And FMCG as a sector, I believe, can benefit with respect to the current budget. But looking at the current market trajectory, no matter any populist measures that come about, unfortunately, every data pattern or indicator suggests that it won't be well received, unfortunately. Hopefully, I'm wrong on this one.
Right. Moving on to markets. Market has been very volatile. What is your expectations, overall expectations on the market before the budget, on the day? What will be the support, resistance of Sensex and Nifty on Feb 1st? As we all know, the market is going to be opened on Feb 1st.
So currently markets as we speak is trading somewhere around 23,100, 23,150 levels. And if you look at open interest data, which is a very popular data people of India or people of multiple geographies look at, is saying that the 23,000 is going to be a support owing to put writing happening over there. I come from a contrarian view. I don't expect 23,000 to be a support. On the contrary, if you see markets below 22,900, there will be a far big slurry of investors which will get trapped, which will lead markets to another 500 points down. I expect the pause to not come at 23,000, but to come between 22,300 and 23,500. That is the level where there is an area of demand, and I expect markets to pause there. Right. Now, the unfortunate thing is if markets don't pause over there, that is, if this band of 22,300 to 22,500 is taken out, it's a 1,400 point free fall to 21,000. So on the downside, we don't expect 23,000 to hold out. We expect another 500 point slide. When will this view get negated? Now, this view will only get negated if there are two positive closings above 24,000, which is quite a way on the upside because it's almost 800-900 points on the upside. So if you see a bounce back to 23,500 or 23,600, one shouldn't get very excited. Why one more hypothesis paves way for what I'm saying is, if you look at texture, 2-3 days markets are going up and one single day 300 points markets are falling. So saw point or 100 points, it's going up 1, 2, 3 days, and on a single day it takes it out with a single candle. So the texture broadly is very weak. Because every little inch you're trying to move up, there are a heavy battle of sellers. And of course, everybody knows how the FIIs are relentlessly selling as well. So unless we have two positive closings, that is strong candles over 24,000, we would continue to be in this downtrend.
Got it. A follow-up question on that. What are the top sectors, top stocks to watch just before the budget?
So before budget normally has a very same plateau, like you will see railway stocks bouncing before the budget, and this will happen time and again. If you check any budget, railway stocks start buzzing towards before budget. But as a whole on 2025, one name which most of your viewers might get surprised me saying, I expect 2025 to be the year of HDFC Bank. I know the charts don't suggest so. I know I'll have 5 people fundamentally telling, no, how is this possible? But 4 years of underperformance, I expect 2025 to outweigh, and I expect HDFC Bank to do well. I also expect the FMCG sector like Hindustan Unilever and the likes of them to do well. In terms of the new age companies, I expect Zomato to do well. In fact, around 200 levels could be an attractive buy for Zomato as well. Purely from budget, again, EV, a sector that is very fastly developing. And because the intervention in batteries is scaling rapidly all over the world, why was there so much scarcity around EV? Even today, if you notice, there is still a little resistance towards EV. And primarily that happens because people say that the battery lasts for 4 hours or 5 hours or 6 hours or 10 hours. It's a headache to charge. Now, because the runway for the battery is now moving out to be 1,000 kilometers, moving out to be 2 weeks and 3 weeks, because battery manufacturers are springing up with new technology, EV's time, I would say, is now and not in the last 2 years. People have been talking about it for 2 years, but I'm again a contrarian, and I would say the next 2-3 years is what is going to do well for the EV segment, which is also something that I expect budgets to do well, give some leeway to that sector as well.
Right. Interesting. Very interesting. Before I let you go, Rahul, one more question. Do you expect any relief in taxation of capital gains expected in the budget? I mean, and if that happens, how will it impact investors?
So I highly doubt something like that would come, but if it does, it would definitely be a very, very positive surprise. And if you notice, I've used the word very 2 times. I would say that the trajectory of how the government has moved towards taxation, they went from 0 to 10, they went from 10 to 12.5 to 15 for short term, and so on and so forth. So the trajectory, once on the upward, has already been accepted by the people. Now, if there was a lot of backlash, they should have done it then and there. Now that it is an accepted norm and government or the exchequer is getting revenue out of it, which is an acceptable norm already for a year now, I highly doubt they would do away with it. I think there are some talks on to give a small on the way they calculate capital gains. I think that is doing the rounds. But that also, I would be surprised if that comes about. In fact, I expect going forward in the next 2-3 years, capital gains to be at 15 and 20% with respect to short and long equity minimum. I'm saying on the minimum side. So I don't expect that to happen really.
Right. Rahul, we spoke about markets, we spoke about tax, capital gains. I have one last question to ask you. Do you really think that, we are heading towards Viksit Bharat and we can achieve it by 2047?
I don't see any reason why not. If your viewers and all of y'all just track news, you will see there are so many companies that are porting back to India. Their head offices, which are in, let's say, a Singapore or a US, they're all coming back to India.
Right.
And Modi ji, our Prime Minister, even in a interview just recently said, and with great conviction, I must say, that all those people who are not going to be in India are bachstane wale hain. So that kind of conviction, looking at the trajectory of what things are happening, looking at the growth of earnings over the years. If you see the growth of earnings over the years has also been quite, if I can use the word, encouraging of that sorts.
Right.
And India has always been in the land of innovation. So I don't foresee any challenges. In fact, I will stick my neck out and say that 2025 might not be a great year for the Nifty. But in, let's say, 2027, that is 3 calendar years from now, you should see Nifty at least 70 to 80% higher than where we are right now. So about 40,000 levels. And this is me being conservative, by the way.
Right. Very interesting insights, Rahul. Thank you so much for joining us. That was Rahul Ghose, viewer, CEO, Hedge.in. Thank you for watching and thank you for joining us, Rahul, again. Thank you.
Pleasure. Thank you so much.